The Reserve Bank has defied market and economist expectations and kept interest rates on hold. It had been widely anticipated that the RBA board would deliver an interest rate cut for the third time this year. Instead, the cash rate remains unchanged at 3.85%. For the first time, the board has published unattributed votes, showing members were split on the decision, with 6 voting in favour of keeping rates on hold and 3 against. Reserve Bank Governor Michelle Bullock says lagging productivity is a factor and the global economy was discussed at length.
By our next meeting in 5 weeks, we will have the June quarter CPI, another labour market reading, further information about international developments and an updated set of forecasts. So the board decided to wait a few weeks to confirm that we're still on track to meet our inflation and employment objectives. As well as a very thorough consideration of Australian economic conditions, global developments took up a lot of time at the board meeting over the past couple of days. The likelihood of a severe downside scenario associated with a trade war, which we set out in our May statement, that likelihood has abated. But this is a very fluid situation, and we will continue to watch the data here and overseas very closely to see how things play out.
Well, borrowers eyeing a rate cut have had their hopes dashed. The Federal Treasurer, Jim Chalmers, says it's not his job to second-guess the RBA board.
There will be millions of Australians around the country who are desperately hoping for more rate relief today, in addition to the 2 rate cuts that we've already seen over the last 5 months. I think I've been upfront in saying that this decision will come as a surprise to the market, has come as a surprise to the market and to almost every economist who's expressed a view in recent days and weeks. Those are facts. It's not for me to second guess the decisions that the Reserve Bank takes appropriately and independently.
And finance reporter Alicia Barry is with me now. Alicia, the RBA clearly isn't in a rush here to cut interest rates. Why is that?
Yeah, certainly disappointing homeowners. That has been the theme of today. And I wouldn't want to be in Michelle Bullock's shoes because she just faced a 1-hour press conference almost and a barrage of questions from reporters questioning the RBA's decision. It was broadly expected that the RBA would cut interest rates today from 3.85% to 3.6%. The majority of economists, 31 out of 37 surveyed by Refinitiv, and the bulk of financial markets with a 95% bet had really expected that we would see a rate cut delivered. Now, the reason that all of those people had dived into the bet for a rate cut was in the end of June, we got the May inflation reading, which showed the underlying read for inflation had come back into the midpoint of the RBA's 2 to 3% band. But Michelle Bullock today said that that monthly read is not as comprehensive as the quarterly read on inflation, which we'll get at the end of this month on the 30th of July. And the RBA would really like to see that to confirm that that underlying rate of inflation is at around that 2.5% range sustainably. She also pointed to the fact that productivity is really not picking up, and if it doesn't pick up as much as the RBA would like, that risks putting further pressure on inflation. Of course, the unemployment market is holding up. It's pretty strong at the moment with an unemployment rate of 4.1%, and there is quite a lot of global uncertainty with the tariffs. But the fact that Donald Trump has pushed out that deadline to August 1 does give the RBA a bit more time as well. So Michelle Bullock, under quite intense questioning today, was at pains to say, look, it's not that we're not going to cut interest rates, we're just not going to cut them today.
So what is the expectation then from here in terms of possible future rate cuts?
Yeah, well, markets were really blindsided today. As I said, there was a 95% chance or so that they had priced in a rate cut. And then after that, the market pricing really bounced around. Right now it has settled down and it is sitting at about an 88% chance for a rate cut on the 12th of August, which is the next meeting, so about 5 weeks away. Whether or not we're going to really pay too much attention to that market pricing is now in question, given the market's got it so wrong today. But as for the outlook, there is at least 2 more interest rates cut cuts priced in for this year, which would take the cash rate down to around 3.1% by December. Economists more broadly think that we will see anywhere from 2 to 4 or even 5 rate cuts. It really does depend on who you talk to. There's a range of opinions. I suppose it's fair to say, though, the direction of interest rates, as Michelle Bullock herself said today, is down.
And how has the market reacted today?
Well, we saw a really big reaction on the market because it was a shock to financial markets. The Australian share market fell about 0.25% after trading flat throughout of the day initially. By the close, though, the markets had come back and finished flat, as you can see there on the screen. The biggest reaction came from the Australian dollar, which immediately spiked on the outlook for higher interest rates than financial markets had expected. It was sitting at about 65.1 US cents ahead of the non-decision from the RBA. It's now sitting at 65.34 US cents, so quite a jump in the dollar, Jade.